Welcome back again. Quick check against last week's review first. I'm going to do this every week now. Last time the takeaway was the cascade continues. Getting out won't come easy. Don't try to catch the bottom by hand. And Bitcoin never got out. It slid to 60,000, down 50% from the October high, and the short worked the whole way. Now to this week. Bitcoin's at 60,000 and Michael Saylor's back in the headlines, but it's not the story the crowd's telling. I'll come back to it in the Bitcoin section because it explains the actual mechanics of this drop. And this week is a live example of BIOS time. Wednesday, the Fed met. First meeting under the new chair, Kevin Warsh. They held the rate, but the signal was hawkish, a hint at a hike ahead with inflation at a 3-year high. This is exactly why the week closes Wednesday in this system. Every scheduled Fed decision drops there, 2 p.m. New York time, and all the institutional flow runs through that point. Wednesday's the climax, Thursday's the reaction, Friday's when you take stock. Today's Friday. Let's wrap it up. On to the market. One picture across the board, the push higher choked out on every time frame and we're back to falling. On the weekly chart, the push went nowhere, structures falling, and trend dominance barely reacted. The chart didn't even reach the zero line. 5-day chart, same thing. The run didn't complete, trend dominance answered weekly, we're heading down. 3-day chart, falling structure, weak trend dominance. Daily chart, the attempt went nowhere. Again, trend dominance was weaker at the touch, back to falling. Now the 12 hours clearest manipulation pattern of the week. Watch. Trend dominance pushed above 50%, so the reach looks like it's on the buyer side. But at the same time, ADP put in 3 touches of the zero line, and all 3 closed clean at zero. Didn't let price up by a hair. Reach is there, movement isn't. That's manipulation in pure form. They show you a strong market to round up everyone who will believe it. The 4-hour chart confirms it. There was a local move up, price got held above the zero line for a while, rounding up the tourist who believed in the bounce again. Then back under zero, weak close, confirmed by trend dominance, and a falling structure breaking its previous lows. The 2-hour chart, same story. Clean drop, weak trend dominance, the market didn't back the move, local lows breaking. Now Bitcoin separately, and here I'll unpack the Saylor story, because it's about the mechanics of this drop. On the weekly chart, after that weak close back in May, structure keeps breaking, we're making new local lows. The push higher ended in nothing good, back to falling. 5-day chart, same picture. The attempt to come back was weak, maybe false. 3-day. Broke the last local lows, couldn't reach zero, falling. First stop here is the minus 25% mark. If we bounce off it, we might come back up or stay below the zero line and drift down by inertia, just less aggressively. But if minus 25 breaks down, the path opens all the way to minus 40%, February levels. Daily chart, weak close below the zero line, the run was false, back down. 12-hour chart confirms, false breakout, new local lows. The zone gets tested a lot. We could stall here, but if it breaks, the path down opens to minus 15%. The 4-hour and 2-hour charts, clean drop, weak closes, new lows. On the 4 hours, possibly down to minus 8%. Everything points down. Now Saylor. The crowd says he sold, he tanked Bitcoin. Convenient story, wrong one. Bitcoin's been falling since October, at 8 months, long before any sale. The real mechanic is subtler. Strategy, the company has a preferred security called STRC, fixed yield. This week it dropped toward $82 against $100 par, more than 15% below par intraday. This isn't panic in Bitcoin itself, it's leverage getting flushed out of an instrument built on top of Bitcoin. The same cascading leverage liquidation I've been talking about for weeks, just one floor up. Strategy's position is now almost $12 billion underwater. That's what's actually on screen, not a sale of 32 coins, but stress in a debt machine built on bull market leverage. The structure of the drop we read on the charts and this mechanic are the same thing. Setup of the week. This time, it's Ethereum. And there's an observation on it worth seeing. On Ethereum weekly chart, clean week closes and a downward structure. But the most interesting part is the 5-day chart. Look how many times in a row ADP slammed into the zero line going all the way back to January this year. 4 touches, you could even say 5, and not once, not a single time since January could it break through. And Ethereum, mind you, is the bellwether for every altcoin. Right now, the 5-day chart points down and the local lows are starting to break. 3-day chart, same picture, the moves above zero were weak. Daily chart, week close below zero, same as Bitcoin, aiming down. 12 hours, false breakout. The 4-hour chart is still holding its local readings, they get tested often, and so far it's holding them. But the 2-hour chart is already starting to break local lows with a clean downward structure, which means it'll probably drag the 4 hours down with it, then the 12 hours, and on up the hierarchy. How you trade it? Since the 12-hour and 4-hour charts point down, we short from zero or from resistance, all like we covered before. If there's a return and a touch of the zero line or a weak close below it, those are your entries. We watch the higher time frames so they don't show a reversal, and the lower ones so buyer dominance doesn't show up there. I anchor on the 2-hour chart, and if I need more reaction, the 1 hour. What to watch from here? For now, we stay short, don't argue with the market. The scenario flips on a return to confident buyer dominance on the mid-time frames first. But pay attention here, we just saw how that works on the market's 12-hour chart. Reach pushes up, and price gets turned away from 0 3 times. So a return on the mid-time frames isn't a signal on its own. It could be another manipulation. Walk a higher time frame up to zero and dump it again. Only a reaction from the higher charts confirms it. Until then, directions down, we join it, we don't guess. That's it for the week. Platforms in the description, indicators and signals available to anyone free. See you next Friday.